Yes, very good morning. So, how are all of you? Good. Right, so let's start with the amendments first which have come in ethics. Yes, I expect that you now maintain silence in the class. Yes, let's start with the amendments which have come in ethics. First coming to clause 6, part 1, first schedule. Does everybody know what is clause 6, part 1, first schedule? Right, solicits client or professional work directly or indirectly by circular, advertisement, personal communication, interview or by any other means. And there are two exceptions to 611. Provided that nothing contained herein shall be construed as preventing or prohibiting a member from applying, requesting, inviting, securing professional work from another chartered accountant in practice. Right, so clause 6, what is the misconduct over there? If you solicit, blow your own trumpet, khud ka gungaan karna, then you are guilty of professional misconduct under 611. And what are the two exceptions over there? One, applying, requesting, inviting work from another CA in practice. That is within the CA fraternity, inviting, applying, requesting, securing professional work from another CA in practice allowed. And second one, responding to tenders or inquiries issued by various users of professional services from time to time and getting professional work as a consequence. Right, so can a chartered accountant in practice respond to tenders or inquiries? That is, can he apply for a name to be put on a particular panel? Yes, responding to tenders and inquiries is the second exception. But the new change which has come over there, the guideline which has come is regarding these tenders and inquiries. So first thing you need to check whether these tenders and inquiries are only for chartered accountants or is it also open for other professionals along with the chartered accountants. Like see, if computerization of land revenue records is to be done, computerization of records, it's not that only a chartered accountant can do that. Even any other BCom or any other professional can also do that work. But if tax audit is to be done, that only a chartered accountant can do. So you need to check whether the tender or inquiry is only for chartered accountants or whether it is open for other professionals also. If it is open for other professionals also, then it says the CA can respond to any tender or inquiry. Then the chartered accountant can respond to any tender or inquiry. And if it is only for chartered accountants, then you need to check whether the minimum fees for that particular audit, have they been prescribed in the tender document itself. So whether the minimum fees have been prescribed, so wo jo bhi tender ka document aaya hai, in that the minimum fees for that assignment, has it been mentioned or not? Yes, two possibilities. It could be mentioned or it may not be mentioned. If it is mentioned, then again CA you can respond to that tender or inquiry. Yes, if it is mentioned, then again chartered accountant you can respond to that tender or inquiry. And if it is not mentioned, the minimum fees for that particular assignment have not been mentioned in the tender document, then CA cannot respond to the tender or inquiry. So tenders and inquiries, what does it say? Is it only for chartered accountants or is it also for other professionals along with chartered accountants? So if it is for other professionals, then CA you can respond to any tender or inquiry. If it is only for chartered accountant, then whether the minimum fees have been prescribed. If they have been prescribed, then CA you can respond to the tender. If it has not been prescribed, then CA you cannot respond to the tender. Right, so if you look in the RTP May 17, question number 19A. Yes, RTP May 17, question number 19A. LMN and Associates, a firm of chartered accountant, responded to a tender issued exclusively for chartered accountants by an organization in the area of tax audit. So is it exclusively for chartered accountants? Yes. And what does the second part of the question say? However, no minimum fee was prescribed in the tender document. So can the CA respond to this tender inquiry? No. And if he responds, he will be guilty of professional misconduct under clause 6, part 1, first schedule. Right, so is the first amendment okay for everyone? Tenders and inquiries, which comes under clause 6, part 1, first schedule. Next one. Yes, does anybody know what is clause 10, part 1, first schedule? Clause 10, part 1, first schedule. What we call it as 1011. What is 1011? Percentage contingent basis fees. How are the wordings of 1011? A chartered accountant in practice shall be deemed to be guilty of professional misconduct if he charges or offers to charge, accepts or offers to accept, in respect of his professional employment, any fees which are based on percentage of profits or which are contingent upon the results of his findings or of such employment, except as permitted under the regulations under the Act. So each and every clause that you study, you know that you have to look into two things. One, the misconduct, and second part, you need to look into the exception. So what does it say? Which is contingent upon the results of his findings or of such employment, except as permitted under the regulations under the Act. So what are the exceptions in the regulations under the Act? The exceptions have been given in Regulation 192. Right, and now in this 192 regulation number 192, it says receiver liquidator. So can a chartered accountant in practice work as a receiver liquidator? Yes, so when you're working as a receiver liquidator, can you charge your fees based on percentage of assets realized? Yes, that was also a question asked in May 15 in the exams. Then auditor of a cooperative society. So again, can your fees be based on the income, the working capital of the cooperative society? Yes, even that is allowed. Valuer for direct taxes and duties. So like, if the property tax is to be paid, the property you have to get it valued from a chartered accountant. So can the chartered accountant charge on the basis of the percentage of the property valued? Yes. Now these three were already there. When earlier you would have studied 1011, these three were already there. Receiver, liquidator, auditor of a cooperative society, and valuer for direct taxes and duties. Now there are some new entries over there. First one it says for fourth one, but in the new one, the first one. Certain management consultancy services. Does anybody know the section for management consultancy in the Chartered Accountants Act? Section 224. And members who are deemed to be in practice, section 22 of the Chartered Accountants Act. Right, so 224 is regarding other services, and we say the term other services includes management consultancy and other services. So certain management consultancy services, there can the fees be based on percentage of profits or can they be contingent? Yes, that is an exception which is added. Then it says certain fundraising services. So, you've helped your client raise funds of 100 crore. Can you charge your client based on 2% of 100 crore? Yes, for certain fundraising services, now you can charge your client based on the percentage of the funds raised. Then it says for debt recovery services. You're helping your client recover their debts, like in case of a bank, you're helping the bank recover their NPAs. So in that case, now can you recover your fees based on percentage of the debt recovered? Yes, you can charge on percentage of the debt recovered. Are you getting certain management consultancy services, certain fundraising services? Then it says the debt recovery services. Right, then the debt recovery services. Then you've helped your client with cost optimization, and you've helped them with cost reduction. So you've helped them incorporate a new system, and because of that they've received a benefit of 50 lakh. So can you charge 2% of the benefit received? Yes. Again, that comes under the exception. Cost optimization, you can charge on the basis of the percentage of benefit received. And it says such other audit or service as may be decided by the council. For that's the balancing figure. Such other audit or services as may be decided by the council. So we already had 3 exceptions in Regulation 192, and now there are 5 more exceptions added over there. Certain management consultancy, matlab not all management consultancy. Certain debt fundraising services, yani ki not all fundraising services. Then debt recovery services, if you've helped your client with cost optimization, then percentage of the benefit received. And the last one, such other audits or services as may be decided by the council. Right, so do you understand the part which I have written in black ink? Yes, that is the addition which has come to the exceptions in the clause 10 part 1 first schedule. Okay, right. So again, if you come to your May 17 RTP, question number 19B. Okay, May 17 RTP, question number 19B. Yes, PQR Private Limited approached CAY, a chartered accountant in practice, for debt recovery services. Now, is debt recovery services there in the list of exceptions that I told you? Yes. CAY accepted the work and insisted for fees to be based on 2% of the debt recovered. So, is it allowed or is he guilty of professional misconduct? Yes, allowed, and hence no guilty of professional misconduct. Right? Does everybody understand that? Okay. So, one we studied for 611, second we studied for 1011. Then do you know 1111? Clause 11 part 1 first schedule. Yes, permission engages in any other business or occupation other than the profession of chartered accountancy unless permitted by the council so to engage, provided that nothing contained herein shall disentitle a member from being a director other than managing whole-time director unless he or his partners are interested in such a company as an auditor. So clause 11 part 1 first schedule कि CA के practice के साथ और क्या क्या कर सकते हैं. So there you know the council has issued two lists. Permission granted generally and second one permission to be taken specifically. You know, specific and prior approval of the council to be taken in each case. So now in the list of permission granted generally, now in the list of permission granted generally, where no separate permission from the council is required to be taken, they've added one more point over there. And what is that one more point which has been added over there? Recovery consultant in the banking sector. So I am a chartered accountant in practice. Without taking permission of the institute, can I also act as a recovery consultant in the banking sector? Yes. Can I act as a recovery agent in the banking sector? No. But can I act as a recovery consultant in the banking sector? Yes. So that is which has come under clause 11 part 1 first schedule. Recovery consultant in banking sector has been added to the list of permission granted generally. Yes, are you able to recall that under clause 11 part 1 first schedule there are two lists over there. Permission granted generally and permission to be taken specifically. So permission granted generally, like you know you have the private tutorship over there. Then editorship of professional journals. Okay, so there they have added this one, recovery consultant in the banking sector. Right, and yes, where are the website guidelines issued by the ICAI under which clause? Yes, website guidelines under which clause they have been introduced by ICAI under clause 6 part 1 first schedule only. You understand that chartered accountant firms are free to create their own website, any color, any format. So in this website, can you give the name of clients and fees charged on the website? Name of clients and fees charged. Can it be given on the website of the chartered accountant on pull request? Name of clients and fees charged. Can it be given on the website? Yes, it says it cannot be given unless it is required by a regulator whether in India or outside India, and such disclosure should be made only to the extent of the requirement of a regulator. So pehle, before this exception came, what was it? That name of clients and fees charged can never be given on the website of a chartered accountant, whether on push request or pull request. But now what is the exception which has come over there? You can give name of clients and fees charged on the website of the chartered accountant if it is required by a regulator, whether in India or outside India, and such disclosures are permitted only to the extent of the requirement of the regulator. You understand? Pehle, what was the situation? That name of clients and fees charged could never be given on the website of the chartered accountant. Now also what does it say? It can never be given unless required by a regulator, whether in India or outside India, and only to the extent of the requirement of such regulator. Am I clear? Yes, so can you give name of clients and fees charged now on the website of the chartered accountant? Yes, only if it is required by a regulator, whether in India or outside India, and only to the extent of the requirement of the regulator. Is that okay for everyone? Right. So again, come to question number 19C, May 17 RTP. ABZ and Company, a firm of chartered accountants, develops a website abz.com. The color chosen for the website was a very bright green, very good. No restriction on the color to be used on the website. And the website was to be run on push technology, very bad. Because website cannot be run on push technology, it has to be run on pull technology. Okay? Only the people who want to access the website should be given access to the website. With the names of the partners of the firm, very good. Because names of partners of firm, is it allowed to be given of the website? Yes. And the major web clients were to be displayed on the website without any disclosure obligation from any regulator. So now do you understand the significance of this part of the sentence? कि ऐसा case study क्यों बनाया है? It says without any disclosure obligation from any regulator. Then in that case, can you give the names of clients on the website? No. So in this case, will the firm be guilty of professional misconduct? Yes. Yes, will it be guilty of professional misconduct in this case? Yes, it will be guilty because it is not required by the regulator. And last question, though there is no amendment over there, but they had to complete the lot of 4 questions. No. So that's why they added the fourth question. XYZ and Company, a firm of chartered accountants, received 4.8 lakh in Jan 2016 on behalf of one of their clients who's gone abroad and deposited the amount in their bank account so that they can return the money to their client in July when he is due to return to India. Yes, which clause? Clause 10, Part 1, second schedule. Yes, a chartered accountant in practice shall be deemed to be guilty of professional misconduct if he fails to keep monies belonging to his client other than fees or remuneration in a separate banking account and to use such monies for the purposes intended by the client within a reasonable time. So I don't know how you have been studying ethics so far, but just as a concluding remark for ethics, it is very essential for you to know the wordings of the clauses of ethics word by word in the exam. And the entire wording, matlab clause number is like the basic data with which you need to start your answer. I always say in my regular batches that CA final audit paper, 2 words are very important in life to begin the answer with, as per. And every answer of the case study, you have to start it with as per. You know, SA 550, related parties, as per section 128 of the Companies Act 2013, as per clause 10, part 1, second schedule. Right, so do you need to write the entire contents, wordings of the clause over there? Certainly, yes. Okay. Then after that, now I come to another standard which has been newly added into your syllabus, SAE 3402. Yes, and does anybody know the title of 3420? Sorry, 3420, not 3402. 3420. Pro forma financial information. Why you've kept a nickname for the standard? The standard has its own complete name. Assurance engagement to report on the compilation of pro forma financial information included in the prospectus. Okay, now this May 16 exam, I'm just going back, to give you a glimpse. And May 16 exams, all exams, question number 1, which is compulsory, all 4 questions are from the standards 99% of the time. Maybe you go for your exams and you'll see first question, all 4 questions, accounting standards. With institute, anything is possible. But still, as a general remark, what has happened? Question number 1, all 4 questions from the standards. So there was question number 1A, 1B. And then there was this question number C and question number D. Question number 1C and 1D. Now May 15, okay, in May 2015, already in question number 1, in one of them they had asked a question on SA 800. You have this 800 series which you would have always left an option. 800, 805 and 810. But anyways, I don't know whether anyone of you from the class had gone for the May 15 attempt, but if you had gone, then you were there at the opening ceremony of this question. एंड यू से अरे यार ये आया एग्जाम में, ये तो मैंने नहीं देखा था 800 सीरीज। फिर क्या सोचते हैं मई 16 में जाने वाले या फिर नवंबर 15 में जाने वाले, अभी आ गया है, अभी थोड़ी आएगा। तो फिर क्या हो गया, फिर से मई 16 में ऐसे 800 का क्वेश्चन, सेम क्वेश्चन रिपीटेड, प्लानिंग एंड परफॉर्मिंग। And then after that, this was not enough to repeat the question. There they also put a question on essay 810, engagements to report on summary financial statements. They asked you the procedures. You understand? So, it becomes so difficult. So, likewise, now what I predict in your exams, in question number 1, say somewhere in question number 1C or 1D, they will put a question on pro forma financial information. And again, you will have to give the balidan, the sacrifice of your 4 marks in the exam if you don't study and go. So first thing, let's try to get an understanding of what is this pro forma financial information. Please understand the title of the SIE. What does it say? Is assurance engagement to report on the compilation of pro forma financial information included in the prospectus. So this has got something to do with the IPO, FPO of the company. So now, say, let me take the name of my client to be Geo Limited. Say, Geo Limited acquired an entity on 1st December 2016. So when did they acquire a company, say a subsidiary company, on 1st December 2016. Now they want to prepare their pro forma financial information as on 31st of March 2016. So what is the concept of this pro forma financial information? It says we understand that you acquired the entity on 1st December 2016. But assuming that had you acquired it on 31st of March 2016, how would your financial position look like as pro forma financial information? You understand? So what is the formula for pro forma financial information? Unadjusted financial information plus the pro forma adjustment. What is the pro forma adjustment? The event or transaction which has actually taken place at a later date, but assuming that as if it would have taken place at an earlier date. Actually, when did you acquire the other company? On 1st of December. But had you acquired it on 31st of March, how would your financial position look like? That is pro forma financial information. Does everybody understand pro forma financial information? So now say you clear in May 17, but had you cleared in November 16, then that is pro forma financial information. You understand now? That is pro forma financial information. Okay, right. Now, what is the responsibility of the practitioner, the auditor over here, to check whether the pro forma financial information has been compiled in all material respects by the responsible party. So, for 3420, the management is called as the responsible party. Whether the pro forma financial information has been compiled in all material respects by the responsible party on the basis of the applicable criteria. And what is the applicable criteria? That event or transaction. So you acquired 5 subsidiaries later on. So had you acquired it on 31st of March, how would it look like? That is pro forma financial information. And what level of assurance is to be given by the practitioner for such an engagement? Again, a reasonable assurance. Okay, whether the pro forma financial information has been compiled in all material respects by the responsible party in accordance with the applicable criteria. All these standards which we study in the 800, 2000, 3000, 4000 series have been divided under 3 parts: acceptance, procedures and the reporting. So now I will discuss with you the acceptance of SAE 3420. You may say, why I am discussing the acceptance of SAE 3420? Because RTP May 17, you see that question in your RTP. RTP May 17, they have put a question on the acceptance of SAE 3420. Right, so if you see the first question in the RTP May 17, the management of S Limited requests you to accept an engagement to report on the compilation of pro forma financial information to be included in the prospectus. In light of SAE 3420, are you all getting? What are the factors to be considered by you as a practitioner before agreeing to accept such an engagement to report on pro forma financial information? Right, so is acceptance of engagement to report on pro forma financial information what is going to be your first point which you will consider before you will accept the engagement? Do you have the competence and do you have the capability? You don't know what is pro forma financial information, anything, and client is asking you, CA, will you give us a report? You say, yes, I'll give the report. Or you don't know, then why you're saying, why you're accepting the engagement? You understand? No. So it's like, someday you've gone to the airport and the pilot has not come. So they are asking you, will you drive the aeroplane for today? You say, yes, I'll drive it. Arey, what? Nikle apne? So do you have the competence? Do you have the capability? You understand? To accept such an engagement. Then after that, the acceptability of the applicable criteria. Like generally for an audit, what is the main precondition? The acceptability of the AFRF, an applicable financial reporting framework. Here it is going to be the acceptability of the applicable criteria. Right, then the wording of his opinion, because the draft format of your report is now required to be given along with the engagement letter itself. So in what manner are you going to issue a report on this pro forma, the wording of his opinion? Then the unadjusted financial information, whether it has been extracted from an appropriate source and whether it has been audited or reviewed, or whether it has never been audited or reviewed. Unadjusted now before giving effect to that pro forma adjustment. So the unadjusted financial information has been audited or reviewed, or it has never been audited or reviewed. If it has been audited or reviewed, then checking the audit report or the review report in order to check whether there is any modification of opinion or any emphasis of matter paragraph. What is EOM? Emphasis of matter paragraph. And if it has never been audited or reviewed, then in that case, understanding the accounting and financial reporting practices of the entity. Accounting and financial reporting practices. Then next one, it says the event or transaction, yani ki that subsidiary which you are acquiring. Again, if that has never been audited or reviewed. All these points are given in the answer which is there in the RTP. Yeah? I told you, this question is there in the RTP, question 1A. So same points in the same sequence have been given over there. So right now, I'm just giving you a glimpse of it. Then later on, when you read it on your own in detail, you should be able to make more sense out of it. Right, so event or transaction has never been audited or reviewed. Then again, understanding the accounting and financial reporting practices. Then whose responsibility to compile the pro forma financial information in accordance with the, accordance with the applicable criteria? Whose responsibility? Responsible party's responsibility. Because what did I tell you here? What is the management called as? Responsible party. So it is the responsibility of the responsible party. Sunne mein bhi alag lagta hai na? Responsibility of the responsible party to compile the pro forma financial information in all material respects in accordance with the applicable criteria. Then design, implementation and maintenance of internal controls, responsibility of the responsible party. Then to provide the practitioner with all information of which the management is aware. Any additional information which could be required from management TCWG and unrestricted access to persons within the entity. So those of you who have left standards in option won't understand this. But those of you who have done these standards will realize that I have copy pasted the preconditions of SE 210. SE 210 agreeing the terms of audit engagement, and I have talked over here about the same preconditions. You understand? So first what I have written in the black color, that is the different part of the acceptance. And then what I have written in the red color, that is copy paste from SE 210. Does everybody understand that? So do you have the competence and capability? right? Then the acceptability of the applicable criteria. So again, what is one very important term for pro forma financial information? The applicable criteria used by the responsible party in the compilation of the pro forma financial information. Right, then the wording of his opinion, then unadjusted has never been audited or reviewed, or it has been audited or reviewed. The event or transaction has never been audited or reviewed, and then the other preconditions of SA 210. Right, then after that, I'll also take the procedures, though they are not there in the RTP. Because what happens, that is also one thing which I've observed. I've observed two things. I can give you two observations. Like, in May 17 exam, they will ask you more questions from the RTP May 16, from the RTP number 15, more. Like 1 or 2 RTPs behind, like from May 17, you will certainly see questions from RTP May 17 also. But you will also see questions from RTP's 1 or 2 attempts before this attempt. And second, in the RTP, if they put the question on acceptance, then in the exam, they'll ask a question on procedures. They'll ask something uske upar niche. You understand, like in one RTP, what they had done of Form 3CD of tax audit. They put a question on clause 28 in the RTP. And in the exams, they asked a question on clause 29. So you're also expect, and actually acceptance is too long to be asked in the exams for 5 marks. So rather procedures is more compact. So I expect that question more to come in your exams regarding the procedures. So now I'm going to discuss with you the procedures of SAE 3420. Does everybody get that? Procedures of 3420. What is the formula for pro forma financial information? Unadjusted financial information plus the pro forma adjustment is equal to pro forma financial information. So what are the procedures you need to perform? Unadjusted financial information has been extracted from an appropriate source. The practitioner, you need to check whether unadjusted financial information has been extracted from an appropriate source. Then the pro forma adjustments, are they directly attributable, factually supportable? The pro forma adjustments, are they directly attributable? Are they factually supportable? Are they consistent with the AFRF? You know something about consolidated financial statements? Line by line addition is possible only if the financial statements are in the same format. So here also the unadjusted and the event or transaction, you can add them only when they are following the same accounting policies, same AFRF. You understand that, no? Without that, line by line addition is not possible. You study in consolidation, if one of your subsidiaries is a foreign component, then first you have to do the gap conversion. Convert it into the gap which is being followed by the holding company, the parent company, and then you can do line by line addition. You study an adjustment called as harmonization of accounting policies. Now, without that, line by line addition not possible. So same thing over here. Is it consistent with the AFRF of the entity? And then whether the pro forma financial information, does it lead to an appropriate presentation? Right, so this is easy. Once you know the formula for pro forma financial information, first 3 sentences so you will get easily. Are they extracted from an appropriate source? The pro forma adjustments, are they directly attributable, factually supportable, consistent with the AFRF? Does it lead to an appropriate presentation? And then 2 more points regarding the applicable criteria. It says the applicable criteria, it should not be misleading. Yes, and it should not come in conflict with any law or regulation. Yes, it should not be misleading. It should lead to an appropriate presentation, and it should not be in conflict with any law or regulation. So in total, how many procedures in 3420? 5 procedures. Does everybody get that? There are 5 procedures in SAE 3420. What are the 5 procedures? The unadjusted financial information has been extracted from an appropriate source, column number 1. Then the pro forma adjustment, is it directly attributable, factually supportable, consistent with the AFRF? Then third one, does it lead to an appropriate presentation? And the applicable criteria are not misleading and they do not come in conflict with the requirement of any laws or regulations. Yes, is that okay for everyone? Procedures of SAE 3420. Right. Then after that in your RTP, you see a question on SRE 2400 regarding the acceptance. What is 2400? Engagements to review historical financial statements. Right. So here the question which is there for acceptance is again nothing but the preconditions of SA 210. Preparation of the financial statements is the responsibility of the management, design, implementation, maintenance of control, and to provide with all information, additional information and unrestricted access. Right, then after SRE 2400, see SRE 2400 and SRS 4410. Do you know what is 4410? Compilation engagements. And now you know in both of these standards they are talking about engagement level quality control. Does anybody know the quality control standard? SQC1. Yes, what are the elements of quality control as given in SQC1? LEHEM. Right? Those of you who don't know LEHEM, leadership responsibilities, ethical requirements including independence, acceptance and continuance of the client, human resources. But for the entire firm it is going to be human resources. But for a particular engagement it is going to be assignment of the engagement team or selection of the engagement team members. Assignment of the engagement team or the selection of the engagement team members. Then engagement performance, and then you have monitoring. What have I written over there? L is for leadership responsibility. Then E is for ethical requirements. Do you know the ethical requirements? Integrity, objectivity, professional competence and due care, confidentiality, professional behavior, technical standards, IOC, CPT. Number 16 in ethics, they ask this question. And what are the fundamental principles? So fundamental principles, ethical requirements, one and the same. Then A is for acceptance, continuance of the client relationship. Right? Then H is for human resources, but I told you if it's a particular engagement, then we'll think only about the resources for that particular engagement. So that's assignment of engagement team. Engagement performance. Yes, when would you say engagement performance there is good quality? When there is proper DSR. What is DSR? Direction, supervision, review. And then when there is proper engagement documentation. And a proper engagement documentation. Right, so this is, I have taken these points from SQC1, Quality Control Policies and Procedures. What are the quality control policies and procedures? LEHEM, leadership responsibilities, ethical requirements including independence, acceptance, continuance, human resources, engagement performance and the monitoring. Why did I discuss that with you? Because if you see over here, yes, there is a question on compilation. Yes, your engagement team member, Mr. Sham. I am reading RTP May 17, question number 1B. Yes, so your engagement team member, Mr. Sham, is engaged as a practitioner for compilation of historical financial information. So that is SRS 4410. Is everybody over there? Yes, what does it say? You as a senior audit engagement team in charge, brief him about what are the practitioner's responsibility as he is engaged to assist management in the preparation and presentation of historical without obtaining any assurance. You know that in case of a compilation of engagement, no assurance, neither an audit nor a review. You are using an account, your accounting and financial reporting expertise. Yes, accounting and financial reporting expertise to assist the management. See what wording they've used. To assist the management in the preparation and presentation of the financial statements. So what are the practitioner's responsibility? And you know, if you go to the answer of this one. Yes, if you go to the answer 1B. Okay, this is 1A, which I've already discussed with you. Acceptance of pro forma financial information. Is it? Right, and then after that, now we come to question answer number 1B. What is 1B? I told you, LEHEM. You have to use the guidelines of LEHEM. So now what is the first point over there? Overall quality of each compilation engagement to which that partner is assigned. Partner assigned matlab leader assigned. Leadership responsibilities defined. Does everybody get that? So I have used the L. Then the engagement being performed in accordance with the firm's QCPP. I told you, firm's quality control policies and procedures as laid down in SQC1. Then acceptance continuance of the client. So you remember LEAHEM. So that A was for acceptance continuance of the client relationship. Then satisfied that the engagement team. So I told you human resources over here is going to be the assignment of the engagement team. Does everybody understand what I say? Human resources is going to be the assignment of the engagement team. Then being alert for indications of non-compliance by the members with the relevant ethical requirements. So LE, so that E is for ethical requirements. And please keep it in mind that it's a compilation engagement. So independence is voluntary. Why voluntary? Because you don't have to express an opinion. Right, then directing, supervising and performing, that is engagement performance. I told you DSR, direction, supervision, review. You can call it performing, you can call it review. That's okay, but that's DSR. So that is engagement performance. And taking responsibility for appropriate engagement documentation. So engagement documentation. What happens? SQC1 is applicable to the entire firm. For audit, we have SA 220, quality control for an audit. But for these review and compilation, we don't have separate quality control standard. That is why in the standard itself, they've incorporated one point regarding quality control. You understand? So anything comes regarding quality control in the exam, take your answer on the lines of LEHEM. What is LEHEM? Leadership responsibilities, ethical requirements including independence, acceptance and continuance of the client relationship, human resources, that will be assignment of engagement team. Then engagement performance in that DSR. What is DSR? Direction, supervision and review. And then the engagement documentation, and then we said the monitoring. Right, is that okay for everyone? So that is SRE 24004410. I've already discussed with you SAE 3420. And then you have this SA 610, which has been revised with effect from 1st April 2016. Right, and in 610, they talk about the general evaluation of the internal audit function and the specific evaluation of the internal audit function. Under the general evaluation of the internal audit function, you have OCA. What is OCA? The objectivity of the internal audit functions means what is the status? How much importance is given to internal auditors in the organization? Who appoints them? To whom do they report? Are their recommendations taken into consideration? What is their organization structure? So that's the mahatva, the importance given to internal auditors in the organization. Then the level of competence of the internal auditors. Okay, are they the members of relevant professional bodies? Do they have the technical training and proficiency as internal auditors? Do they have knowledge of the AFRF? Right? Do they follow the standards on internal audit? So that's the competence of the internal auditors. And the systematic and disciplined approach including quality control. So that's OCA, the objectivity, the competence and the systematic and disciplined approach including quality control. And specific evaluation. See, what is the difference between general and specific? Overall, I'm thinking whether I should use work of internal auditors. And specifically, I'm thinking regarding expenditure control, should I use work of internal auditor? Then that is specific evaluation. Under specific evaluation, now say expenditure. I will check whether the work of internal auditors has been properly planned. Has it been properly performed? Yes, has there proper supervision of the work? Has the work been properly reviewed? And whether there is proper documentation of the work, whether the work has been properly documented. So we remember it as PPSRD, where the work of internal auditors has been properly planned, performed, supervised, reviewed and documented. work of internal auditors, whether it has been properly planned, performed, supervised, reviewed and documented. Then whether sufficient appropriate evidence has been obtained by the internal auditors for that work which they have done. And the conclusions reached by the internal auditor, are they supported by the work performed? So PPSRD, sufficient appropriate evidence and conclusions reached. So if you see in the exams previously, they've asked a question. Okay, statutory auditor wants to use the work of internal auditor with respect to physical verification of fixed assets. So physical verification of fixed assets, matlab that is a specific evaluation of the internal audit function. And now in the 610, there is a new concept of direct assistance. Okay, you're telling the internal auditor to do some work on your behalf. So on what basis you will decide whether you matlab the statutory auditor, whether you should do the work on your own or whether you should use the work on or get the work done from internal auditor. If you decide to take direct assistance from the internal auditors, then in that case you need to direct supervise and review their work. If you decide, no, this expenditure ka 10 samples controls I'll tell internal auditor only to check, then you need to direct supervise and review the work of the internal auditors. Right. So on what factors will you decide whether to use the work of internal auditors? Very important question for the exam. On what factors will you decide whether to use work of internal auditors? It says the amount of judgment involved. Yes, can I tell internal auditor, अरे internal auditor थोड़ा मेरे लिए देख लो ना, कंपनी का going concern assumption बराबर है क्या नहीं? Can I take direct assistance? Can I tell him कि you देख लो कि accounting estimate बराबर है क्या नहीं, risk of material misstatement कुछ है क्या, accounting policy बराबर है क्या? तो you say ये तो क्या? मतलब it's like you don't want to do the statutory audit on your own and that all work you are delegating. कि internal auditor थोड़ा external confirmation भी मंगवा लो third party से. Yes, can you delegate such work to the internal auditor? Can you take direct assistance for these matters? No. You want to tell him to check some authorization. You want to tell him to check some maker-checker concept, segregation of work. That work you can delegate. You can take direct assistance. But assessing the risk of material misstatement, checking the appropriateness of going concern, significant accounting estimates, that work you can never delegate to the internal auditor. Right? So the judgment involved, the risk of material misstatement. So the more the risk, the more we will prefer to do the work on our own rather than giving the work to the internal auditor. The organizational structure of the internal auditors. The organizational structure, whether they have a good say in the organization or they have no proper status. Then the objectivity of the internal audit function, that is again the importance and the competence. You say this internal auditor has no knowledge of Ind AS. So if I'm telling him to check the internal financial controls, he won't be able to check because internal financial reporting controls. Now, you say this internal auditor has no competence. He doesn't have knowledge of the AFRF. So again, what you will say? No taking direct assistance. I will do the work on my own. Does everybody understand what I say? Direct assistance. What are the factors? In your RTP May 17, they've put 2 questions for this one in the chapter of internal management and operational audit, saying that the statutory auditor is telling the internal auditor to assess the RMM and he is telling the internal auditor to get the confirmations from the third parties. Both of these work, you cannot take direct assistance. Statutory auditor, you will have to do this work on your own only. Does everybody understand? Okay, so that's the main changes which have come in the standards. So to summarize, 1 SA 610 using the work of internal auditors, SRE 2400, SAE 3420 and SRS 4410, and all 4 are applicable with effect from 1st April 2016. Is that okay for everyone? Right. Then after that, now in your exams, in your syllabus, they are talking about the components of internal control, which is already there in one of our standard SA 315. Right? And for May 17, this is a very important question. Components of internal control system. What are the components of the internal control system? CRISM. Yes, what are the components of the internal control system? CRISM. What does CRISM stand for? Control environment. Then risk assessment. Control environment, risk assessment. Then information system and communication. Information system and the communication. So if you look in your RTP, you will find these points over there itself. Right? Control activities. And then last one you have is the monitoring. Right? So what are the components of the internal control system? It says CRISM. So as per the module, you have a separate chapter called as risk assessment internal control. Now, in our books, we don't have a separate chapter for that. But though the points of that chapter have been incorporated in the other chapters. So what are the components of internal control? Control environment. Okay, what is the importance given to the controls again? How much is the participation of TCWG? What is the commitment to competence? Risk assessment. Have they done the identification, analysis and management of the risk? Then accordingly, have they developed their information system and communicated the roles and responsibilities? Have they defined the control object activities to achieve the control objectives? And monitoring is nothing but internal audit. Right, so again, I just want to draw your attention to this particular part of update which has come in the RTP May 17. Control and the components of internal control, control environment, risk assessment, information system and communication, control activities and monitoring. And now in this chapter, they have remembered something from your IPCC days. They have remembered the inherent limitations of internal control system, which is again an important question for May 17. Inherent limitations of internal control system. So if you see in the question bank also of May 17 and if you see in the RTP also or in the updates part also, in both places you will find these inherent limitations of internal control system. Right? Inherent limitations of internal control system. So first thing what I discussed with you was the CRISM. Now I'm discussing with you the inherent limitations of internal control system, which is we remember it with the vowels A, E, I, O, U and then C, M. Yes, what is A, E, I, O, U? It says abuse of authority. You've done so much of division of work, authority, responsibility defined, and the person to whom you've given the power, he himself is abusing the power. So what is one inherent limitations of internal control? Abuse of authority. Then there might be human error. You understand? Galti se ho gaya, hai na? Unintentional. So human error. So that E over there stands for error, hai na? Human error. Then I over there stands for inadequate procedures. Okay, the controls in the organization may become cumbersome. They may become old. They may become outdated over a period of time. The procedures which you followed in your internal control 10 years back may be inadequate in today's circumstances. So that time you had no controls for online and a debit card, credit card, but now new controls are required. Then O stands for collusion among employees. So you have to skip the C and then remember the O over there. What does that O stand over there for? Collusion, illusion. So collusion among employees. As a chartered accountant, you have to always adjust. Okay, we are known for doing adjustment. Okay, so collusion among employees. Right, so collusion among employees. What you did? Division of work. A, B, C, D, all the division of work done. And what happened? They created a racket. And they all joined hands together. And they overrided the controls in the organization. Unusual transactions. Okay, the controls in the organization may not be sufficient to record any unusual transactions which occur. Right, so say you always have been dealing in local currency, but all of a sudden first time you had a foreign currency transaction and there were no controls in the organization for the same. Then C is cost effective. Designing a foolproof system which is incapable of failure may require crores of rupees, but you say it's not worth the cost if you do a cost benefit analysis. So designing what you say 100% efficient controls, it may not be cost effective. Right, and then in spite of all this, finally it is the intent of people which occur, because of which a fraud occurs in the organization. So that is, there could be manipulations by the management, or a very important term of SA 240, which is MOC. What is MOC? Management override of controls. Okay, in spite of the best possible controls, if the management overrides, because design, implementation, maintenance is management's responsibility. But there is always a possibility that they themselves may override the system in the organization. Right, so that's again the question actually from IPCC audit. But now they've put it in the updates, the inherent limitations of the internal control system. Right. Then after that, now in your syllabus, and rather in your syllabus, I should talk about the updates. In the updates, they have now also put for you the guidance note on internal financial controls over financial reporting. Right. So now whenever this internal financial controls is asked in your exams, they talk about two things, two definitions. One definition of IFC and second definition of IFC over financial reporting. If you notice it carefully in the guidance note, one, they talk about internal financial controls, and second, they talk of internal financial controls over financial reporting. Right. So internal financial controls, it says the policies and procedures. Yes, again, see, I need not say it after each question or before each question. All what I am discussing right now is very important for your exams. Right, so it says the policies and procedures which have been designed, implemented and maintained. What is DIM? Design, implementation and maintenance. So policies and procedures which have been designed, implemented and maintained by management, TCWG, that is those charged with governance, to provide a reasonable assurance. Why only reasonable assurance? Why? Because there are also inherent limitations of internal control system, which we just saw. Just as there are inherent limitations of an audit. So why should you have internal controls in your organization, or why should you have the internal financial controls in your organization? One, in order to ensure the safeguarding of the assets. So anything regarding internal control, anything regarding internal financial control, or anything regarding internal financial controls over financial reporting comes in your exam, you write down what I am telling you right now. You understand? It says safeguarding of the company's assets. मतलब ये simple क्या है कि क्यों company में controls होना चाहिए? Why there should be controls in the organization? So one, it says to safeguard the assets. Is everybody getting what I'm discussing? Right. Then adherence to company policies. Then the adherence to the company policies. Then prevention, detection of fraud or error. Obviously, that is one of the most crucial reason as to why we design controls in the organization. Prevention, detection of fraud and error. Then orderly, efficient conduct of business. Orderly and efficient conduct of business, which you can call it as the smooth flow of operations. Right, so orderly and efficient conduct of the business. Right, then timely preparation of reliable financial information. And a timely preparation of reliable financial information. Obviously, if the controls in the organization are good, will the financial information generated from that system be more reliable or less reliable? Certainly, it is going to be more reliable. So timely preparation, क्योंकि continuous system में entry होते जाता है, you have control. So timely preparation of reliable financial information and the accuracy and completeness of the accounting records. And the accuracy and completeness of the accounting records. So why should there be controls in an organization? It says these are the reasons. to safeguard the assets, to ensure adherence to company policy, to prevent, detect fraud, error, है ना? To ensure orderly and efficient conduct of the business, to ensure timely preparation of reliable financial information, and to ensure the accuracy and completeness of the accounting records. So what is IFC? We remember it as supporter. Right? What is supporter? Yes, safeguarding of assets, adherence to company policy, prevention, detection of fraud, error, orderly, efficient conduct of business, timely preparation of reliable financial information, and the accuracy and completeness of accounting records. And what do they say about the definition of IFC over FR? What is IFC over FR? Internal financial controls over financial reporting. It says to provide reasonable assurance regarding the reliability of the financial reporting. To have such a process in the organization, what am I telling you? IFC over financial reporting. It says there should be such a process in the organization because of which you will have a reasonable assurance regarding the reliability of financial reporting. Regarding the reliability of the financial reporting. So such a process which will ensure that your accounting records are more reliable. So what is ensured through internal financial controls over financial reporting? It says such a process to provide a reasonable assurance regarding the reliability of the financial reporting and the accounts and records. Right, then where in the Companies Act 2013 do you find a reference to IFC? One, it says in section 134 subsection 5, which is regarding the director's responsibility statement. Are you all with me? Right, one in section 134 subsection 5, which is regarding the 134 subsection 5, which is regarding the director's responsibility statement. It says whose responsibility? Design, implementation and maintenance of IFC, director's responsibility. Right, so director's responsibility to maintain an adequate internal financial controls and also to ensure the OE. What is OE? The operating effectiveness of such controls. Then the statutory auditor of the company, under which section does he need to report on IFC? 143.3I. You know 143.3, there are 10 points of reporting to the statutory auditor. And information, proper, branch, books, AS, adverse, directors, maintenance, IFC, others. So statutory auditor, you have to report under 143.3I. Whether the company is having adequate internal financial controls and again the operating effectiveness. For which companies does the statutory auditor need to report on IFC? All companies, including one-person company and small company. And for standalone and also for consolidated financial statements. You read the guidance note, you'll find what I'm telling you. For which companies have to comply with the requirement of IFC? All companies, specifically the IFAP, including one-person company and small company, and it applies to the audit report on standalone financial statements and also for the consolidated financial statements. Is it okay for everyone? Right, then section 177, Audit Committee. The audit committee also needs to take discussions, have a discussion with the auditors of the company regarding the internal controls, regarding the internal financial controls, and also Schedule 4. What is Schedule 4 to the Companies Act? Independent directors. So independent directors also need to oversee the internal financial controls in the company. So, you know, when you say guidance note applicable, guidance note of IFC applicable, so this is what is given in that guidance note. What do you mean by IFC? Then what is IFC over FR? Then which are the sections of the Companies Act 2013 which are talking about IFC? Yes, is that okay for everyone? Right. Then now in your RTP May 17, they've also incorporated section 130 and section 131 of the Companies Act 2013. Section 130 is regarding the reopening of the financial statements or recasting the financial statements. And 131 is regarding voluntary revision of financial statements. 131 is regarding the voluntary revision of the financial statements. Right, so what does it say? When can a company reopen or recast its financial statements? Only when an application has been received by the Income Tax Authority, by the Securities Exchange Board of India, central government or any appropriate authority, and an order has been passed by the tribunal or the court. So, any company cannot. As per section 130, what does it say? For a company to reopen its accounts or to recast its financial statements, an order should have been received from Securities and Exchange Board of India or from the income tax authorities or from the central government. And also an order should have been passed by the tribunal or the court, saying what? That the company's accounts have been prepared in a fraudulent manner and that the company has been mismanaged. And then only they can do a reopening of the accounts. Right? So what does it say? So in your exams, there could be a case study. A company wants to reopen its account. So what you need to do over there? You need to mention the sections of the Companies Act. Any company cannot reopen its accounts. So section 130 of the Companies Act states that a company shall not reopen its books of account and recast its financial statements unless an application, page number 16 of the RTP. You understand? If not 16, I can tell you the other, 151. And page number 151. Yes, and not recast its financial statements unless an application in this regard is made by the central government, the income tax authorities, the Securities and Exchange Board, any other statutory regulatory body or authority or any person concerned, and an order is made by a court or a tribunal to the effect that. So in your exams, now they can make a case study on this one. The company wants to reopen its books of account. It wants to recast its financial statements. So it says application and order. Application from the central government, income tax, SEBI, any other statutory regulatory body. An order from the court or the tribunal. And what does it say? That the accounts were prepared in a fraudulent manner and the affairs of the company were mismanaged. Then only a company can reopen its accounts or revise its financial statements. And then section 131, voluntary revision of financial statements or board's report. What does it say? Section 131. And the company may, the financial statements and the board of the report of the company, if they do not comply with the provisions of section 129. And so if they voluntarily they think कि नहीं ये जो financial statements बनाए हैं या ये जो board report बनाया है, it is not in compliance with section 129. They may prepare revised financial statements in respect of any of the 3 preceding financial years. So now there is a restriction. Again, there could be a question that they want to prepare for 4 years. They want to voluntarily revise. So can they revise for 4 years? No, 3 years. And any of the preceding 3 financial years after obtaining again the approval of the tribunal on an application made by the company in such form, and a copy of the order shall be filed with the registrar. So what is 130? The reopening of the accounts. What is 131? The voluntary revision of the financial statements. And then you also have a change which has come under section 129. What is 129 regarding financial statements? Right. What did we study? What do you study in section 129? Okay, now consolidated financial statements have become mandatory under the Companies Act 2013. So, if consolidated financial statements are required as per accounting standards also and Schedule 3 also, then you prepare consolidated in accordance with AS and Schedule 3. However, if accounting standards says that you did not prepare consolidated financial statements because it meets the criteria for exclusion as per the AS, still as per section 129, you will have to prepare consolidated financial statements in accordance with Schedule 3. Why? Because now consolidation has become mandatory under the Companies Act 2013. So if AS says consolidated is to be prepared, very good. We will prepare as per AS plus Schedule 3. But AS says consolidated need not be prepared. The company has one subsidiary and that one subsidiary meets the criteria for exclusion as per the AS. So do you need to prepare consolidated as per AS? No. But still you will prepare consolidated as per Schedule 3. But now it says under the Companies Act also, consolidated financial statements need not be prepared if the following 3 conditions are fulfilled. So that's again a new entry. Yes, very, very important. This was never there in the exception to section 129. Now this has come newly. Okay, where the company has a wholly or a partially owned subsidiary, wholly or a partially owned subsidiary, and all the members of the company who are entitled to vote have said that it has given a notice to that effect. Okay, it is okay if the company does not prepare the consolidated financial statements. So the members of the company have intimated to the company. Okay, it would be no problem if the company does not prepare consolidated financial statements. Second one, the subsidiary is not listed or is not in the process of getting listed whether in India or outside India. The subsidiary which I am talking about is not listed or is not in the process of getting listed in or outside India. And third one, the ultimate holding company or the intermediate holding company. The ultimate holding company or the intermediate holding company has prepared consolidated financial statements in accordance with the applicable accounting standards. The 3 conditions are attached with the word and. So all 3 have to be fulfilled, and then it says as per section 129 also, you need not prepare consolidated financial statements. Yes, wholly owned subsidiary or partially owned subsidiary and an intimation has been received in writing. Okay, it is okay if the company does not prepare consolidated, that subsidiary is not listed or not in the process of getting listed, whether in India or outside India. An ultimate or intermediate holding company has prepared consolidated financial statements in accordance with the applicable accounting standards, then it is okay if consolidated financial statements are not prepared as per the requirement of section 129. So certainly we expect to see a question on this one in the exam. You understand? Okay, where consolidated financial statements need not be prepared, what are the conditions? Does everybody get that? Okay. Then consolidated financial statements, if you look at the chapter, the entire chapter has been revamped. You understand why? Because the new guidance note on audit of consolidated financial statements has come. But just little bit of additions, deletions to the point over there. But the main change over there is in the reporting, where now they have put 5 conditions. You understand? It says all the components have been audited by the parent company auditor only. All components. Components matlab kya? Subsidiary, associate, joint ventures. So all components have been audited by parent company auditor only. Then few of the components have been audited by an auditor other than the company auditor. So components have been audited by the component auditor. Then the components which have been audited have been prepared in accordance with a different accounting framework other than that of the parent. Then the components have been audited by the auditor in accordance with a different auditing framework other than that which is followed by the parent company auditor. And last one, it says few of the components are not audited. If you see in the updates also and if you see in the question bank also, दोनों जगह इसका question डाला है, RTP May 17. Whatever I am talking, unless otherwise I specify, I am talking about RTP May 17 only. You understand? तो वहाँ reporting में ऐसे 5 criteria, मतलब 5 अलग-अलग possibilities create करके रखे हैं. क्या अलग अलग possibility create करके रखा है? One, all components of the company have been audited by the parent company auditor only. It's similar situation, na? Head office and branch office. And the company auditor has only done the audit of all the branches. So here the parent company auditor, he has only done the audit of all the components. Is it? Second situation, के parent company auditor has not done the audit of all the components. मतलब components have been audited by some component auditor. Third one, what does it say? The components, yes, the accounting framework used by the component is different from the parent company framework. the accounting framework being used by the component, then the auditing framework being used by the component, and last one, the components are not audited. Okay, all components audited by parent company auditor, nothing different over here. It simply says you have to express an opinion on the true and fair view of the consolidated state of affairs, consolidated profit and loss, and consolidated cash flows for the year ended on that date. Yes, true and fair view of the consolidated balance sheet nahi bolne ka, consolidated state of affairs, which is reflected by the balance sheet. The consolidated profits or loss, which are reflected by the profit and loss statement, and the consolidated cash flows, which are reflected by the cash flow statement. Right, then few of the components have been audited by other than the company auditor, yani parent company auditor. So in this case, it says you need to apply SA 600. Yes, you need to apply SA 600, and parent company auditor, in your report on consolidated financial statements, you need to put a other matter paragraph. Okay, out of the above 5 subsidiaries have been audited by the other auditors whose reports we have considered while preparing our own report, and our opinion is not modified in respect of this matter. Is this a qualification to your opinion? No, rather this is a clarification. Yes, and you have to clearly disclose the magnitude of information which has been audited by the other auditors. And that comes, those subsidiaries, they reflect 20% of the assets, 30% of the revenue, 20% of the cash flows, whatever it is. Then, what does it say? The components have been audited under a different accounting framework. So, you need to check the gap conversion, which has been done by the management. So the parent company auditor, you need to check the gap conversion which has been done by the management of the parent company. Who will do the gap conversion? Not the auditor. It will be done by the management of the parent company. As an auditor, you only need to check the entries or the adjustments which have been done for the gap conversion. Does everybody understand that? And sometimes what they do, to all the components, they release the group accounting policies. Okay, all components for consolidation, these are the group accounting policies which you need to follow. So in that case, again, you need to check whether the group accounting policies have been followed. Different auditing framework. Indian audit, so audit is done as per standards on auditing. Now say somewhere it is in America or any other country, then they would have done as per the standards on auditing in their country. You understand? So it says it should correspond to the Indian generally accepted auditing standards. It should be corresponding to the Indian GAAP. What is GAAP? The generally accepted auditing standards in India. It should correspond to the generally accepted auditing standards in India. Whatever is that other auditing framework. आपको 3 और 4 में फर्क दिख रहा है क्या? 3 में accounting framework है, 4 में auditing framework different है. And last one, not audited. Well, if these components, 2 subsidiaries have not been audited by anybody. यानी कि regarding those components, you are unable to obtain sufficient appropriate audit evidence. You need to consider the implications in accordance with SA 705. Right? Unable. What is USAAE? Unable to obtain sufficient appropriate audit evidence. So you need to consider the impact on your opinion for qualified or disclaimer, because few of the components have not been audited by anybody. Right, so few of the components have been audited by another auditor. You need to apply SA 600. Can anybody tell me what is the evaluation we do in 600 while you are using the work of another auditor? Yes, C cube ADV. What is C cube ADV? You need to consider the competence of the other auditor. You need to coordinate with the other auditor while planning the work. You need to consider the significant findings of the other auditor. You have to advise the other auditor as to the significant accounting, auditing and reporting requirements. Discuss with the other auditor if need be, and visit the branch of the company if required. So that same evaluation which we do in 600, when some of the branches have been audited by a branch auditor, that same evaluation you have to do in consolidated financial statements when some of the components have been audited by other than the parent company auditor. You understand? And which are the मतलब accounting standards के हिसाब से consolidated बनाया, तो उसके लिए कौन से accounting standards applicable होते हैं? 21, 23, 27. And now you have the company's Ind AS accounting standard rules 2015. So according to that, which are the Ind AS for consolidation? Ind AS for consolidation? Ind AS 110. Then you have Ind AS 103. Yes, so you have it. I'm telling you if you don't know. Okay. Then Ind AS 28. Now I'm not confirming. I'm telling you. Earlier I was asking you. Okay, so that is one question which you can again see in your exams regarding the Ind AS. They may ask you a question on the Ind AS. I'll just show you that. ये देखो यहाँ पे. Okay, ये देखो page number 201 in your RTP May 17. No talking in the class. Yes, RTP May 17, page number 201. For consolidation of subsidiaries in accordance with company's Indian Accounting Standard Rules 2015. It says Ind AS 110. Ind AS में minority interest को क्या बोलते हैं? Non-controlling interest. Okay, so it says goodwill, capital reserve and non-controlling interest as determined in 103. Then again intergroup transactions in accordance with Ind AS 110. Then Ind AS 28 and Ind AS 111 on joint arrangements. Right, so that is again another question which may come in your exams regarding the company's Indian Accounting Standard Rules 2015. So you have to make a reference to Ind AS 110, 103, 28 and 111. Which is regarding the joint arrangements. Is that okay for everyone? Right. Then after that, next over there. Right, so that's for consolidated financial statements. Yes, no talking in the class. Then after that, you have a chapter on audit committee and corporate governance. And there is a lot of air going on about this chapter right now. Audit committee and corporate governance. Because if you look into your applicability for May 17, it says the SEBI LODR 2015 are applicable for May 17 exams. SEBI LODR. What is the SEBI LODR? The SEBI Listing Obligations and Disclosure Requirement Regulations 2015. Right? The SEBI LODR. And if you read the SEBI LODR, and whatever is the content in whichever book that you are studying audit from, that is if you study clause 49 of the listing agreement, like now you have the SEBI LODR which is applicable to your exams. Before this you had clause 49 of the listing agreement. Okay, and if you compare the contents of these two, they are a replica. Exactly the same. All the points which are talked of in clause 49 of the listing agreement are given in the SEBI LODR. See, when you are getting listed or when you are, applying for listing, that time you will comply with clause 49. But once you are listed and you continue to be a listed company, then you need to comply now with the SEBI LODR. Right, SEBI LODR. So again in the RTP May 17, we are seeing a lot of questions from SEBI LODR or clause 49. One, they are talking about the issues of corporate governance. And the answer for issues of corporate governance is nothing but the summary of the entire chapter. Okay, what all are the matters which are addressed in corporate governance? It says the composition of the board, the constitution and the role of the audit committee, the risk management committee, the code of conduct, then the whistleblower mechanism, that is the vigil mechanism, the CEO, CFO certification, the information to the shareholders, the management's discussion and analysis. So what you have to do when you are asked issues of corporate governance, you have to write down the headings of all the contents which are there in your books in the chapter of audit committee and corporate governance. I'll just show you a glimpse of that. Yes, issues of corporate governance. Okay, I've come to the answer, but I can also take you to the question where it comes, in the updates where it has come. Right, so in the updates it is given in page number 167. Right, so issues of corporate governance. So what are the issues addressed? It says responsibilities and key functions of the board, its composition and the disclosures. You know, at least 50% non-executive directors and at least one woman director. Then if the chairman of the board is executive, non-executive, promoter, not a promoter, related or not related, then accordingly 1/3 independent directors or 1/2 independent directors. So that's the composition of the board. Code of conduct and vigil mechanism. What is vigil mechanism? The whistleblower under the corporate governance. You know, there should be a policy if any employee comes to know any unethical behavior, and there should be also adequate safeguard against victimization. Then the composition, meeting, power, roles and responsibilities of the audit committee. Management of subsidiary companies, procedures relating to risk management, related party transaction, MD&A. What is MD&A? Management discussion and analysis, information to the shareholders, compliance certificate by the CEO and the CFO, and compliance certificate from the auditor or the practicing company secretary, whether the company has complied with the conditions. So, you know, they may ask you this question in your exams, issues of corporate governance, and what you have to write in the answer is the entire summary of the chapter. More important question according to me is the applicability of LODR, which may come in your exams in May 17. Question number 7, write short notes on applicability of LODR. So one thing, do you know to which companies is LODR applicable? Listed companies. And what all securities could be listed? What are the designated securities which could be listed? Right, one, the shares of the company, either on the main or the SME platform. Then what others could think, what other designated securities could be listed? It says the non-convertible or the convertible instruments. Then it says the recognized debt instruments. Then the units of mutual fund. Right, so applicability of LODR. Right, so this is again a very important question for your exams. And applicability of LODR. Do you see it on page number 168 in the RTP? If you don't have the RTP, just write it somewhere. Applicability of LODR, page 168, RTP May 17. So unless otherwise provided, these regulations shall apply to the listed entity who has listed any of the following designated securities. And what are the designated securities which are coming in that category? Specified securities listed on the main board or the SME exchange. Non-convertible debt securities, non-convertible preference shares, perpetual debt instrument. Indian depository receipts, securitized debt instruments, units issued by mutual fund and any other securities as may be specified by the board. So what are the two important questions which I showed you from corporate governance? One, the issues on corporate governance, and second one, the applicability of the LODR regulations. Right, the applicability of the LODR regulations. Then, if you come to the chapter on cost audit, there they, yes, not more than half an hour left, okay. So, applicability of cost audit and the exemption from cost audit. Yes, applicability of cost audit and the exemption from cost audit. Right, both of these questions are important. मतलब ये new आने के बाद अब इसमें change भी हो गया. You understand now? They were new. Since the time they were new, no question asked. Now new has become old and it has been revised also. Right, so now at least we expect a question on that one. You understand now? So applicability of cost audit and the exemption from cost audit. What does it say for the no talking in the class? Yes, no noise. Regulated sectors and the non-regulated sectors. And then under the regulated sectors, they talk about the overall annual turnover. And for the non-regulated also, the overall annual turnover from all its products or services and the aggregate of the individual products or services to which for which cost records are required to be maintained. Individual product or aggregate of individual product service turnover for which cost records are required to be maintained. You understand? Say if the company is manufacturing paper, do they need to maintain cost records? Paper, does it come in the list of non-regulated sectors? Yes, but there first there is a blanket condition. What is the blanket condition? That your overall turnover should be 35 crore or more. So I am a company manufacturing paper, but my turnover from paper is only 15 crore. Then though I am in the non-regulated sectors, but then still I did not maintain the cost records. And if I don't maintain cost records, there is no question of getting a cost audit done. Do you understand? तो इसीलिए यहाँ पे क्या बोला है? Overall annual turnover from all its products or services. So for paper, भले ही I am not maintaining cost records, but will that be considered in this amount of overall annual turnover? Yes. And then it says the overall and the aggregate of the individual product service turnover for those for which I am maintaining the cost records. So for the regulated sectors, it says the overall annual turnover is 50 crore or more. And the individual product service turnover is 25 crore or more. So what are the numbers which you have to write in the first column? 50 crore or more and 25 crore or more. And for the non-regulated sectors, 100 crore or more and 35 crore or more. Right, so what are the conditions over there? It says overall annual turnover for regulated sectors 50 crore or more and aggregate of individual product service turnover 25 crore or more. And for non-regulated sectors 100 crore or more and 35 crore or more. And what is the exemption from cost audit? 3 over there. If the company is operating in a special economic zone, or more than 75% of revenue is coming from exports and foreign exchange, or if more than 75% of the revenue is coming from exports and foreign exchange, or which is into electricity, which has a captive generating plant. You understand? Electricity generating plant for captive consumption. So that's a new entry which has come over there. Right, so regulated and non-regulated. For regulated, 50 crores or more, and for individual, it says 25 crore or more. And for non-regulated, 100 crores or more, and for individual, 35 crore or more, then you need to get a cost audit done. So it's not necessary that all companies which have to maintain cost records have to get a cost audit done. Right, and then you have the exemption from cost audit, which says if you are operating in an SEZ, that is in a special economic zone, now here it is or more than 75% of your revenue, more than 75% of the revenue is coming from exports in foreign exchange. So in local currency, then no exemption. In foreign exchange, more than 75% revenue is coming from exports in foreign exchange, or which is in the electricity generation. This is a new entry. Electricity generation for captive consumption through a captive generating plant. Electricity generation. Right, so if you see in your May 17, you'll find a question for this one, captive generating plant. Yes, if you see in your RTP May 17, you will find a question for this captive generating plant. Right, see cost audit rules not to apply in certain cases, page number 218. The requirements for cost audit under these rules shall not be applicable to a company whose revenue from exports and foreign exchange exceeds 75% of its total revenue, or which is operating from a special economic zone, or which is engaged in the generation of electricity for captive consumption through captive generating plant. This is a new entry in the exemption. This was not there before. What is the new entry? Has everybody noticed that? Which is engaged in the generation of electricity for captive consumption through a captive generating plant. And if you also look at the question bank of May 17, see there is a question 15b. Electro Limited is engaged in the generation of electricity for captive consumption through captive generating plant. The company also maintains cost records in their books as required under cost audit and record rules. Ex-friend of managing director suggested the name of his brother, who is a cost accountant for the purpose of cost audit. However, the statutory auditor of the company is of the view that the company is not legally required to conduct a cost audit. Now the managing director is in a dilemma about the requirement of cost audit. Being an expert in cost records and audit rules, you are required to guide in this regard. Right? So does the company need to maintain cost records? Yes, but do they need to get a cost audit done? No. So if you look at the answer, it says the provisions and then these 3 exemptions. What are the 3 exemptions? Operating in an SEZ or more than 75% of revenue is coming from exports in foreign exchange, or which is engaged in the generation of electricity for captive consumption through a captive generation plant. In the given case, Electro is engaged in the generation of electricity. Therefore, Electro is not required to conduct a cost audit, as it is following under the exemption criteria. Hence, the opinion of the statutory auditor of the company regarding non-applicability of cost audit is correct, and the management should follow the same. Right? Is that okay for everyone? Okay. Then after that, you have the contents of the audit report of the mutual fund, which has now been added in your chapter of special audit assignments. Contents of the audit report of the mutual fund. And see, if you specifically know what are the contents of audit report, now so you are going to know because you are studying. But any report they ask, one exam, they keep on asking you different reports. So you always have to take a base of 143.2 and 143.3 of the Companies Act. What is 143.2? Give true and fair view. And 143.3, those 10 points of reporting, information, explanation, whether balance sheet and profit and loss account, are they in agreement with the books of account. So here also, what are the contents of the audit report of the mutual fund? Whether the auditor has obtained the information and explanations, which to the best of his knowledge and belief were necessary for the purpose of the audit. Is everybody with me? I am discussing with you the contents of the audit report of the mutual fund. So whether he has obtained the information and explanation, which to the best of his knowledge and belief were necessary for the purpose of the audit. Then whether the balance sheet and revenue account. Now see, in mutual fund does not have a profit and loss account. They have a revenue account. So whether balance sheet and revenue account, are they in agreement with the books of account? Whether balance sheet and revenue account, are they in agreement with the books of account, and whether the balance sheet and revenue account give a true and fair view. Right? So information, explanation, balance sheet and profit and loss account in agreement with the books of account, and whether the balance sheet and revenue account give a true and fair view. Right? So that's the contents of the audit report of the mutual fund. Yes, the contents of the audit report of the mutual fund. What are the contents of the audit report? Information, explanation, balance sheet, profit and loss account in agreement with the books of account, and whether they give a true and fair view. Right, so if you look into mutual funds, yes, special audit assignments, page number, yes, page number 219. Right, so if you come to the 5th point over there, after the 4th point, the auditor shall state whether, yes, I'm coming just above ethics. I've just come just above ethics, the 2 paras above ethics which are there in the RTP. Whether he has obtained all the information and explanation, which to the best of his knowledge and belief were necessary for the purpose of the audit. Then the balance sheet and revenue account, are they in agreement with the books of account? And the auditor shall give his opinion whether the balance sheet gives a true and fair view of the scheme-wise state of affairs of the fund as at the balance sheet date, and whether the revenue accounts gives a true and fair view of the scheme-wise surplus or deficit of the fund for the year period ended at the balance sheet date. So information, explanation in agreement with the books of account, and whether they give a true and fair view. Right. Then under the chapter of fiscal laws, audit under fiscal laws, Form 3CD. Now the income computation and disclosure standards are applicable, ICDS. The income computation and disclosure standards. So again, this is a 5-star question. And a very important question, income computation and the disclosure standards. Right, what are these income computation and disclosure standards? How many are there? Yes, 1 to 10. Yes, you have these 10 income computation and disclosure standards. Okay, and we have more or less, we remember the AS ka number for sure. So how you have to remember? AS 1 to 7. AS 1 TWO to 7. Then 9 to TO 2 to 13. And then 16 AND 29. What is this? 1 to 7. Yani ke AS 1, AS 2, AS 7. Then AS 9, 10, 11, 12, 13 and 16 and 29. So what is the name of ICDS 1? Disclosure of accounting policies. ICDS 2, inventories. ICDS 3, construction contract. ICDS 4, revenue recognition. ICDS 5, tangible fixed assets. ICDS 6, for effects of foreign exchange. ICDS 7, government grants. ICDS 13, government investments. ICDS 9, it says borrowings. Yes, it talks about the borrowing costs. And ICDS 10, it talks about the provisions, contingent liabilities and the contingent assets. So easy for you to remember the numbers or the names of the ICDS. What you have to remember is 1 TWO to 7. Right? Then 9 TO 2 to 13. And then you have to remember 16 and 29. Is that okay for everyone? Right? So these are the income computation and disclosure standards. ICDS 1 to 10. Then where will you report regarding the ICDS? Clause 13D, Clause 13E and Clause 13F. Right? Clause 13D, 13E and 13F. What is what is Clause 12? Clause 12 of Form 3CD, not Clause 12 Part 1 first schedule. Okay, I am asking you Clause 12 of Form 3CD, any presumptive basis taxation. Then what is 13, 14, 15? 13 is regarding method of accounting. 14 is regarding the method of valuation of closing stock. 15 is regarding any capital asset converted into stock in trade. So what is 13 regarding? Method of accounting. So 13D is regarding any adjustment being made in the profit and loss of the company due to the ICDS. Then 13E is regarding the details of the adjustment. The details of the adjustment. And 13F is regarding the disclosures for the ICDS. So these are the changes which have come in Form 3CD, 13D, 13E, 13F. Yes, 13D, 13E and 13F. 13D is regarding the adjustment, 13E is regarding the details of the adjustment and 13F is regarding the disclosures of the ICDS. Right, so if we have a look at it over here, right, ICDS, so, yes, it says 13D, yes, page number 256. Reporting for adjustment to be made to the profits or loss for compliance with ICDS. Right, so 13D of Form 3CD of the tax audit report requires the tax auditor to state whether any adjustment is required to be made to the profits or loss. Yes, for complying with the provisions of ICDS. Then if the answer to 13D is affirmative, then the auditor have to give the details of the adjustments as follows. Right, so that is 13E, increase in profit, decrease in profit and the net effect. And 13F also requires the tax auditor for the disclosure of the following as per the ICDS. Right, so that is why 13D, 13E and 13F. 13D, the adjustment. 13E, the details of the adjustment. And 13F is the disclosures. Yes, do you understand that? And one of the very favorite clause of the institute from Form 3CD is clause 21. What is clause 21? Amounts debited to P&L. You know, 16 and 21, they are ulta, they are reverse. 16 is less income, amounts not credited to P&L, and 21 is more expenditure, amounts debited to P&L. It says capital expenditure, political expenditure, personal expenditure, penalties or fines. Then you remember this one, okay? Entrance fees and membership and club services and facilities used. Payments without deducting TDS. You understand? Then payments in excess of 20,000 being made by other than account pay check or account pay draft. All that comes under clause 21. And 21DA, 21DB is mainly regarding the payments in excess of 20,000 being made by other than account pay check or account pay draft. Then circumstances in which a chartered accountant cannot be appointed as a tax auditor. That's not there in the RTP May 17, but that's also a new entry over there. What is the question that I am asking you? Circumstances in which a chartered accountant cannot be appointed as a tax auditor of a company. If he is writing the books of account of the company, then yes, MOCS, no. I'm talking about when a chartered accountant cannot be appointed as a tax auditor. When he cannot be appointed, if he or his relative is having substantial interest or he is indebted for an amount exceeding 10,000. So I don't know which notes you have, but in case if you have the AS Foundation notes, okay, in the chapter of fiscal laws, yes, maybe the page numbers may differ a bit, but over there you have a point. Yes, page in the chapter number 16 under the heading 16.4. If you don't have it also, it's okay. Okay, but what are the points? What does it say? Circumstances under which a chartered accountant cannot be appointed to conduct a tax audit. It says if you are the internal auditor, or if you are writing the books of account of the assessee, or if you or your relative are having substantial interest in that concern, or if you are indebted for an amount exceeding 10,000, then though you are a chartered accountant, you cannot be appointed to do a tax audit of the concern. Because if you look at the question bank and the last question in the question bank, no talking in the class, audit under fiscal laws, if you look in that chapter in the last question, which was asked in RTP May 16, and I told you more in May 17, from which RTPs also are we going to see question, May 16, November 16, November 15. Right, so last question in the chapter of fiscal laws, what is that? Circumstances in which a chartered accountant in practice or a firm of chartered accountants cannot conduct a tax audit under section 44AB. So what are the circumstances under which a chartered accountant cannot conduct a tax audit? If he is writing the books of account of the assessee, if he is an internal auditor, if he or his relatives are having substantial interest, or if he is indebted for an amount exceeding 10,000. Yes, if he is indebted for an amount exceeding 10,000. Right, and then last we come to yes, the company's auditor's report order 2016. Yes, and what does the applicability of CARO 2016 say? That CARO shall apply to every company, including a foreign company, except a private limited company, new entry over there, not being a subsidiary or a holding of a public company. So if there is a private limited company and its holding is the public or its subsidiary is a public, then that private limited company is like a deemed public company, and hence CARO applicable irrespective of the conditions. Because what does the applicability of CARO say? That CARO shall apply to every company, including a foreign company, except. And now those five are permanently to them CARO not applicable. One person company, small company, section 8 company, insurance company and banking company. And private limited company we say subject to 3 conditions. What is first? Now 4 conditions हो गया actually, क्योंकि अभी first पहले एक blanket condition है ना. Private limited company not being a subsidiary or a holding of a public company, having paid up capital and reserves and surplus not exceeding 1 crore as on the balance sheet date, and the total borrowings from banks or financial institutions not exceeding 1 crore at any point of time during the financial year, and total revenue as disclosed in Schedule 3, including revenue from discontinuing operations not exceeding 10 crore during the financial year. So does revenue include other income? Yes. Right. Does total borrowings from banks or financial institutions include bills purchased and discounted? Yes, it includes bills purchased and discounted. Listen to me carefully. Total borrowings which should not exceed 1 crore. I am asking you what is included and what is not to be included. Because exam में कैसा problem होता है कि add किया तो applicable और नहीं add किया तो not applicable. It's like 80 lakh they've shown term loan and 30 lakh they have shown what you say bills purchased and discounted. So it's like bills purchased and discounted. 80 plus 30 कर दिया तो 110 तो applicable, exceeding 1 crore हो जाएगा और नहीं ऐड किया तो 80 lakh होगा तो not applicable. So you should know whether bills purchased and discounted it is to be considered while calculating borrowings or not to be considered. So it is to be considered. Outstanding dues in respect of credit card, is that to be considered while calculating total borrowings? Yes. Interest accrued and due, is it to be considered while calculating total borrowing? Yes. Interest accrued but not due is not to be considered while calculating the total borrowing. While calculating paid up capital and reserves in surplus, should you consider share application money? No. Yes. Should you consider debit balance in profit and loss account? Always. Always. Okay, debit balance in profit and loss account now always is to be reduced from paid up capital and reserves and surplus. Will you consider debenture redemption reserve while calculating paid up capital, reserves and surplus? Yes. Capital redemption reserve, dividend equalization reserve, fixed assets replacement reserve, securities premium account, all reserves. All reserves are required to be considered as disclosed in Schedule 3. Right. Then in CARO, coincidentally, it is CARO 2016 and there are 16 clauses. You understand? In that clause 1 is regarding fixed assets and that fixed assets there are 3 points and the C point over there is again a 5-star. RTP May 17, we've also seen a question on that. Whether title deeds of immovable properties are held in the name of the company, if not provide the details thereof. Title deeds of immovable properties, are they held in the company's name? Now see, in November 16 also they asked in a question in your exams regarding clause 12 of CARO 2016, Nidhi company. And what did they ask? What are the reporting requirements and what are the audit procedures? So what is the reporting requirement? Title deeds of immovable properties, are they held in the name of the company? If not, provide the details. If not, when to give the details for the same. And what are the audit procedures you will perform? For title deed, you will check the sales deed, the transfer deed, the conveyance deed, to check whether it is in the name of the company. Then what if the title deed is lost? Then FIR has been filed. Then what if the property is under conversion? Then you amalgamation or firm LLP converted into a company. Then you will again check the court order for the conversion. Then what if the property is under dispute? You will make inquiries of the management. And what if the property is mortgaged with the bank? Then again you need to get a confirmation from that institution. Right. And then you are going to reconcile the total immovable property shown in the fixed assets register and the total title deeds that you have seen. So if you see in your May 17 RTP, you see that one of the factory building is in the name of the director of the company. One of the factory building, it is NSP Limited, question number 8B, 8B2, page number 227. Yes, page number 227. NSP Limited has its factory building. Are you all seeing that? Appearing as fixed assets in its financial statements in the name of one of its director who was overlooking the manufacturing activity. So as an auditor, where will you report? Under? Not CARO. ऐसे क्या? I'll report under CARO. Clause 1C of para 3 of CARO 2016. If you report under CARO, then you know this attempt will be a test series. Okay, so you better don't report under CARO. You better report under clause 1C of para 3 of CARO 2016. You know, there are 3 answers, the right answer, the wrong answer and the ICAI answer. You say, मैडम बराबर ही तो लिखा है, सब कुछ तो लिखा है मैंने आंसर में, देखो ना मैडम 1 मार्क ही दिया है, 1.5 मार्क ही देते हैं, अरे उनको 10% लोगों को ही पास करवाना है. You understand ना? They only want 10 to 15% people to pass. You understand? So they are just waiting for you to do a mistake. You do 9 things right, you do 1 thing wrong, and they're just waiting कि बस तुम करो वो एक गलती. And then maximum students which fail in the category of 185 to 195. Out of 85% which fail, 80% fail. Okay, so if you get 100 marks out of 400 and you fail, you deserve to fail. You've got 25, 25, 25, 25. I'm telling you, you better write the exam again. But when you get 38 and then you've got 42, and most painful is when you get 58. You understand? And then another you've got 38 or 37 or something like that. And maximum are coming in this this most 80% of the failure is in the category of 185 to 195. So, you know, lot of effort is not required from reaching to 1 to 180. 1 to 180, all sitting in the library, now 80% of those will reach over there. If you don't sit in the library, if you sit in CCD and Starbucks, then that can't happen. For that, you have to sit in the library. So 180 tak you will reach, normal studies say. But the extra effort, the finishing touch is to go from that 180 to 200. That journey is difficult. Getting 180 is not difficult. Getting those extra 20 marks is very difficult. Anyways, okay, I have to discuss amendments. Right, so clause 1C. And title deeds of immovable properties, are they held in the name of the company? If not, provide the details. Okay, so that's a new entry. And then see, whenever you will be starting the 16 clauses of CARO, you have to look into 2 things. One, what are the reporting requirements? And second, to report on this, what audit procedure I need to perform? Because that is going to be the main content of your answer. Do you understand that? Okay, how you are going, what reporting, what procedures are you going to perform for the same? Then you have clause 10, which is regarding fixed as fraud. And what is fraud के clause में क्या change आया है? Any fraud on the company or any fraud by the company by its officers or employees. This was not there in the old CARO. Any fraud on the company or any fraud by the company by its officers or employees noticed or reported during the year. If yes, the nature and amount involved is to be indicated. Okay. Yes, so whether any fraud on the company or any fraud by the company by its officers or employees. Did you notice that? By its officers or employees. Noticed or reported during the year? If yes, the nature and amount involved is to be reported. Right? So external frauds not covered in CARO 2016. Suspected frauds, are they covered in CARO 2016? No. Why suspected frauds not covered? Because they say very clearly noticed or reported. So 3 types of frauds not covered in CARO 2016. External frauds not covered. Suspected frauds not covered. And immaterial frauds not covered. Why? Because what does the guidance note on CARO say? That whenever you are reporting on fraud, you need to apply the concept of materiality. So that is why immaterial frauds also are not to be reported. So external frauds not covered, suspected frauds not covered, immaterial frauds not covered. Yes, in CARO 2016, clause 10. Right, then clause 9. And I'm going to the one above that. Whether money is raised by IPO, FPO and term loans, end use of issue proceeds, were they applied for the purpose for which they have been raised? Okay, and if not, then there are 3 Ds over there. Which are the 3 Ds? Details with the delays or the default. And now look at the stringence, which is the strict how CARO has become, and the subsequent rectification, if any. So, you had raised money to buy plant and machinery. But there is still some delay in the purchase of plant and machinery. So, for the time being, you put the money into mutual fund. So that is, the details of the delays and the defaults. And then right now for short time, you've put it in mutual fund. But later on, have they purchased a plant and machinery? That is subsequent rectification, if any. Right, then clause 11, new entry, where the managerial remuneration has been paid or provided for in accordance with the requisite approvals mandated under section 197, read with schedule 5 to the Companies Act 2013. If not, state the amount involved and look at the height, the steps taken for securing refund of the same. Matlab, if excess managerial remuneration has been paid, steps taken for recovery of the same. Right, so how much is the managerial remuneration as per section 197? 11% of the net profits. Okay, so what if A Private Limited has paid managerial remuneration at 12% of net profit? Where will you report? Yes. Section 197 is not applicable to private companies. That is why no reporting for private limited companies under clause 11 of CARO 2016. What did I say? A private limited has paid 12% of net profit as managerial remuneration. You don't write down over there, okay, no, they should have paid 11% and they've not complied with 197. What you have to say that section 197 is not applicable to private companies and hence reporting under clause 11 of CARO is not applicable to a private limited. So though CARO will be applicable to a private limited company, clause 11 of CARO will never be applicable to a private company. And what if the company wants to pay managerial remuneration where there are no profits or inadequate profits? Yes, it says special resolution in the general meeting required and prior, it has to be within the limits specified. What if the company has inadequate profits or no profits? They can declare pay managerial remuneration which is within the limit specified. And what if they want to double the limit? Then special resolution in the general meeting and also the prior approval of the central government. Okay. Right, then clause 12 they've already asked. Clause 13 is again a new entry, related parties. So now, in the exam, when a question is asked on related parties, you have a lot of references to be given. Right, one for related parties, you have AS 18. Second, for related parties, you have SA 550. Now, for related parties, you also have clause 13 of para 3 of CARO 2016. And then you also have section 177 and 188 of the Companies Act 2013. Right, so clause 13, what does it say? 1. Whether the transactions with the related parties, are they in compliance with section 177 and 188? And second, the disclosures of the transactions, has it been done in accordance with the applicable accounting standard? Yes, what is going to be the applicable accounting standard in this case? AS 18. So 2 points over there. One, whether the transactions with the related parties are in compliance with section 177 and 188 of the Companies Act 2013. And second, whether the disclosures are made in accordance with the applicable accounting standards. Right, so 2 points over there. So very much we expect a question on clause 11, which is managerial remuneration. Clause 13, which is regarding related parties. Then what is clause 14? Preferential allotment. Clause 15, non-cash transactions with the directors. And clause 15 is again divided under 2 parts. Clause 15 of CARO has again been divided under 2 parts. Whether the company has entered into non-cash transactions with the directors. So first you need to check whether they have entered into non-cash transactions. And if yes, then whether it is in compliance with section 192 of the Companies Act 2013. So 2 parts again over here. One, whether the company has entered into a non-cash transaction. And if yes, then whether it is in compliance with section 192. So you need to take a representation from management. You need to check the minutes of the meeting, the fixed assets register, register of contract. Then you also need to go through the cash flow statement. Then whether prior approval, special resolution has been passed and an ordinary resolution. Then also if he is a director in the holding company, whether a resolution has been passed over there also. Right, so again if you look into your, yes, what you say, the question bank of May 17. Yes, again over there is a question regarding the non-cash transactions. Yes, there is a question over there regarding the non-cash transactions. 8B, no? Question number 8B1. RPS Limited has entered into a non-cash transaction with Rahul, son of director, which is an arrangement by which the RPS is in the process to acquire assets for consideration other than cash. So other than cash, matlab it's a non-cash transaction with the directors or the persons connected with the directors. So as an auditor, where will you do the reporting? Under clause 15 of para 3 of CARO 2016. Right, so clause 11, managerial remuneration. 12, Nidhi company. 13, related parties. 14, preferential allotment. 15, non-cash transactions. And 16, registration with RBI, which is also there in RTP May 17. Right, so whether the company is required to be registered under section 45IA of the RBI Act 1934, and if yes, whether the registration has been obtained. So one, in order to get registered, you need to check the activities which are being carried on by the company. Then you need to check at least 50% of their assets is coming from finance, at least 50% of their assets are financial assets, and at least 50% of their income is coming from the financial assets. Then they've complied with the net owned fund ka requirement. And then you need to check whether the certificate of registration has been obtained. And if it has not been obtained, then the reasons for the same. Right, so what are the questions in RTP May 17 that you find of CARO? One, you find a question on clause 6, which is regarding cost records. If maintenance of cost records have been prescribed by the central government under section 148(1), whether such cost accounts and records have been made and maintained. Then after that, we've seen a question on clause 1C, and title deeds of immovable properties. Are they held in the name of the company? Then we've also seen a question on clause 16, which is regarding registration with RBI. And we've also seen a question on clause 15, which is regarding the non-cash transactions. Right, and I told you this 11, 12, 13, 14, 15, 16. Yes, I'm just writing it in the numerals right now, but in the exams, you know, this is how you quote the clause of CARO. Small numerals and small Roman numbers. So what does it say? 11, managerial remuneration. 12 to already asked, but that's Nidhi company. 13, related parties. 14, preferential allotment. 15, non-cash transactions. And 16 is regarding the registration with RBI. And another important one is that clause 1C, title deeds of immovable property. Are they held in the name of the company? If not, provide the details for the same. Right, with that we shall stop. So before I stop, does anyone of you have any question? Right, so I wish you all the very best for your exams. Yes, thank you so much.